So how often does this really happen to you? Because it happens to me. I'm sitting down with my customer to start talking to them about life insurance, and all they're wanting to do is focus on a term policy, or they're just wanting to know exactly what the price is of that policy. Well, stop and ask yourself, why are they asking that question? Or why are they wanting to just focus primarily on a term policy? Well, the fact is, your customer is just focusing on life insurance and how it benefits their beneficiaries, and not exactly how it can help them personally. Well, what if we could change the dynamic of that conversation? Start focusing on the living benefits associated with life insurance as opposed to focusing on how it can benefit the beneficiaries. My name is Tristan Thomas with List Academy, and today we're going to do exactly just that. We're going to focus on a method, a simplified method that's going to help impact every conversation that you have with your customer about life insurance. It's what we call the life policy description. It's something that I used personally many times before to talk to my customers about the different types of life insurance. This exact presentation that we're going to go over today helped me close a $100,000 a year 10-pay policy, solely on the first conversation being this sales method. Now in this video, we're going to go over first how it helps the client. It's going to help them understand exactly how a life insurance policy works. If you start to talk to average Joe walking on the street, what life insurance does, they're going to tell you that life insurance is for my beneficiaries, not for me. Well, we're going to change that. What we're going to do is we're going to focus on exactly how it can help them personally, the person that's paying the premium. Think about this as well. If your customer is paying $100, $200, even $500 a month for life insurance, if they don't understand the living benefit concept, what do you think is the first thing that's going to go away when times get tough? It's the life insurance policy. So we need to change the dynamic of this conversation. We're going to debunk any permanent myths that your customer may have because they listen to the media, they listen to the Ormans of the world that talk about how term's the best way to go and permanent policies are not something that you should have, right? You should buy term and invest the difference. But we both understand that that's not the case. Also, it's going to be a realization of the living benefits. You'll be surprised exactly how many customers are amazed that permanent policies actually build cash value and exactly how that can be used for their own personal use. Also, they're going to purchase based on a desire. They're not going to be thinking that you sold them a particular policy. You're empowering your client to make the best decision possible on their particular need. For you as an agent and advisor, it will provide a clear understanding of life insurance being offered. And this isn't a 30, 40-minute presentation. This only takes 10 minutes to do in front of your customer. It discusses the benefits of all types of policies. So you're letting them know exactly how a term policy works and a permanent policy works. But you, again, empower your client to make the best decision possible, as you see right there. Also, it closes higher premium cases. Like I said, this helped me close a $100,000 a year 10-pay policy solely on the foundation of this sales method. And always a good thing, we're going to increase the life closing ratio that you have with this method. So when should you use this? When should you start talking to your customer about the life policy description? Well, any life conversation that you have, anytime that you have the ability to talk to your customer about life insurance, this is the exact method that you want to use in bringing up the conversation. Build a foundation first before you start talking about all the added riders and other little bells and whistles to a life policy. And any term conversion opportunity. I know you'll have a few people in your book that have a term policy. Well, that term may be coming up due. And if so, what you want to do is you want to educate them on the benefits of a permanent policy. All right, so let's jump into that method that we use with our customers. Now, when we're talking about this when our customer is in front of us. This is something that we should never email to our customer because it does not have the same impact. So this needs to be done when we're sitting in front of our customer at our desk or at a Starbucks or wherever it may be. So usually the way that I bring this up is I tell the customer, now, Mr. and Mrs. Customer, do you mind if we go over a quick way to show exactly how the different types of life insurance policies work? This is something that I showed one of our previous customers and they understood exactly how it worked. Would you mind if we do the same? Then they'll say absolutely. So this is the exact sales method that I'm using. So what I'm going to do is I'm going to break this up into 3 different columns. Okay, so it'll be term, return of premium, and a permanent policy. Now the numbers that I'm using are not the customer's numbers. You never want to use the customer's numbers. What you want to do is you want them to focus on the concept and not the price. So if you're putting their exact numbers in these columns, what's going to happen is they're just going to say, wow, the term policy is so much cheaper than the permanent policy. And that's the last thing we want to do. So I'm always generalizing the numbers, and the numbers that we're using here are for a 40-year-old male, non-tobacco, for $100,000 in coverage. So always 40-year-old male, non-tobacco for $100,000 in coverage. Now, if the customer is a female, all I'm doing is I'm saying that these numbers are for a 40-year-old female, non-tobacco, $100,000 in coverage. The reason why I want to do that is because I don't want the numbers to change, but I want them to understand exactly how the concept works and make them understand why it could benefit them personally. So what I want to do first is I want to talk to them about the exact cost per year. Now, before we go any further, I want to let you know that we're talking about a 20-year term and a 20-year return of premium, and the permanent lasts for the duration of however long that customer lives, right? So the first thing that your customer is wanting to know is exactly, well, what's the price that I'm going to pay on an annual basis? Well, for that 20-year term, you would pay $300. Return of premium would be $800. And the permanent would be $1,300 per year. So that's the cost that your customer would pay each and every year going forward. Now, right off the bat, what is your customer thinking? Well, shoot, I want the term policy and I don't want the permanent because it's $1,000 more expensive, right? Well, let's fast forward 20 years, Mr. and Mrs. Client, is what I tell them. Let's fast forward 20 years and let's talk about when this customer is 60 years old. If they pass away within that 20-year time frame, all policies work the same in where the $100,000 death benefit will be passed along. But what we care about is the 20th year, after that duration is all said and done, right? So let's focus on that when you're 60. What's the total cost that you pay over that 20-year time frame? Well, with the term policy, it would be $6,000. Return of premium would be $16,000, and the permanent would be $26,000. So that's the total cost that you paid over that 20-year time frame. But Mr. and Mrs. Client, that's not what we care about, right? That money's all gone. You already paid that money. That's already said and done. The 20 years is up. You didn't pass away. Congratulations. So what we care about at this point is the benefit to you personally, Mr. and Mrs. Client. What equity have you built up over this 20-year time frame? What value do you have out of all 3 of these policies? And in our industry, Mr. and Mrs. Customer, we call that cash value. Now time out for a second. Now the reason why I say it that way, I talk about benefit, equity, and value, is because they understand those words. We understand cash value. So what we want to do is we want to use words that are synonymous with cash value. If you can have your customer understand how cash value works and the benefit to them personally, they start to understand why cash value is such a necessity. So, Mr. and Mrs. Client, let's talk about that cash value. On that term policy, you don't have any cash value that's being built up into the policy. It's that life insurance is only for a term. After that term, the money that you put in went to the cost of insurance and you have nothing out of it. Return of premium works just like the name says, so you receive a check for $16,000. It's like taking that money, putting it under your mattress, and not being able to touch it for 20 years. Now, the way that the permanent policy works, and there's different ones, there's the whole life, universal life, and so forth, but in essence, the way that it works is we take the $26,000 that you put into it, subtract the cost of insurance, and either pay a dividend or an interest rate depending upon which policy it is. And if we maintain the same dividend option, you would actually have a cash value of $27,000 that you have access to. Now time out again for a second. What I want to do is I want to tell them exactly how cash value works and how a permanent policy works, but I want to simplify it as much as I possibly can. So all I say is I say we take the $26,000 that you put into it, we subtract the cost of insurance, and then we pay out either a dividend or an interest rate. I don't get any further information along those lines because I don't want them to be bogged down in all this information about how a permanent policy works. I want to simplify it for them personally. So that's exactly how cash value works on all 3 of those policies. But now, let's just say you need life insurance in 20 years. And hopefully you don't, but our job as your life insurance sales expert is to make sure that if you do need life insurance in 20 years, that you have the ability to get it. Hopefully you don't, but let's just say that you do. If there are people that are dependent upon your income, we both understand that you need life insurance. So if you do need life insurance, I need to ask you, Mr. and Mrs. Client, what is your health going to look like in 20 years? Well, the fact is we don't know, right? We don't know. Hopefully we don't, but we could have high blood pressure, diabetes, God forbid, cancer. All these things would make us uninsurable or would affect our insurability, right? Well, if we're wanting another term policy in 20 years, we need to go through the same underwriting standards that we went through 20 years ago. And the fact is, we're not sure exactly what our health is going to look like. That will impact our insurability. Same thing with return of premium. We need to go through the same underwriting standards we went through 20 years before. Well, what about the permanent policy though? The fact is, you don't have to go through underwriting anymore. The one time you go through it is the only time you'll have to go through it based on that policy. The reason why is because, Mr. and Mrs. Client, it is our promise to you that as long as you keep paying that $1,300 per year, we're going to pay out that death benefit regardless of your health moving forward. But let's just say that you're in perfect health. Let's just say you're running marathons, triathlons, doing whatever you do. Let's just say you're in great health. Well, let's talk about what the cost per year at 60 years old would be, right? 20 years into the future. Well, one thing that we can't do, Mr. and Mrs. Client, is take into account any inflation that may occur over the next 20 years, right? We can't take that into consideration. All we can really do is we can look at exactly what the price is today for a 60-year-old male, non-tobacco, for $100,000 in coverage. Well, the fact is it's going to be much more expensive than that term policy. In fact, it will actually be $1,700 per year. Roughly 5 times the original amount moving forward is what you would have to pay for the next 20 years. Return of premium, roughly 4 times that original amount. You're paying $3,300 per year. But, Mr. and Mrs. Client, what do you think you're paying on that permanent policy? Well, the cost is exactly the same as it was from day one. You're still paying $1,300 per year. Well, let's fast forward another 20 years, Mr. and Mrs. Client. Let's just say that you don't pass away from age 60 to age 80. Because if you did pass away, all 3 policies work the same where we pay out that $100,000 death benefit. So what we want to know is first, how much did you pay? But then we'll talk about the benefits after that 20th year. Well, the cost from age 60 to age 80 on that term policy would be $34,000. So I'm just taking the $1,700, multiplying that by 20. So the total amount that you paid into it was $34,000. Return of premium, $66,000. And again, on the permanent would have been $26,000. But since that never went away, the total amount over that 40-year time span that you paid into it was $52,000. And that's why I have it in parentheses. But again, Mr. and Mrs. Client, what we care about is the benefit to you personally, right? We care about the equity that you've built up over that 20-year time frame. And what do we call that again, Mr. and Mrs. Client? Cash value, right? Now, you see how I did that as well? What I did is I said we want to focus on the benefit. We want to focus on the equity, the value that we built up. And then I proposed the question, what do we call that again? The reason why is because if they can use the same terminology that we're using, then they're understanding exactly how the life insurance and the benefits to them actually work, such as cash value. So I then say, Mr. and Mrs. Client, on that 20-year term, you paid $34,000 into it. Again, what do you get out of it? What's the cash value that you built up? They'll answer, 0. I'm just paying for that duration and I get nothing back. That's exactly how it works. Well, how about that return of premium policy? It's just like the name says, returns all of your premium. So you receive a check for $66,000. Like taking that money and putting it under your mattress, right? Now, how about that permanent policy again? What we do there is we take all the money you paid into it, so the total $52,000, we subtract the cost of insurance because there is a cost, and then we pay out either a dividend or an interest rate depending upon what type of policy. But in this case, if we're paying out a dividend, over that 40-year time span, the cash value that you would have accumulated would have been $82,000, $30,000 more than you had put into the policy. And again, who has access to that money? You personally have access to all $82,000. Well, let's just say you're 80 years old now and you do need life insurance. Our hope is that you don't need life insurance. We hope that you don't need life insurance because you're self-insured. But the fact is, there may be still a need for life insurance, right? And if there is a life insurance, what is our job? Our job is to make sure that you have the ability to purchase life insurance, or at least have it at age 80. Well, regardless of health, can you purchase a 20-year policy at age 80? They're not insurable. Regardless of your health, doesn't matter who you are, you cannot purchase another 20-year life insurance term policy. Return of premium, same thing. You can't purchase it. But what do you have with that return of premium policy? You have $66,000 to your name. Now, in essence, you are self-insured. Just take $25,000 and store it away for a funeral and do something else with the other $41,000, right? But what about that permanent policy? Do you think you're still insured? Absolutely. You still are insured. You still have $100,000 in coverage that's still insuring your family. But what else do you have? You have $82,000 to your name. The only one of these three policies that actually doesn't help you personally, Mr. and Mrs. Client, is the term policy, because you paid over $40,000 you paid into this policy and you got nothing out of it. It's just the peace of mind that you're paying for. So that's exactly what I want to show my customer on exactly how the life insurance policies work. But the most important thing is I want to show them two different questions. I want to propose two different questions to them. This is the first question. The first question is, I say, Mr. and Mrs. Client, if price was not an issue, which policy would you prefer and why? Right? So if price was not an issue, which gets rid of the objection of price, which one would you prefer and why? And then I just stop talking. The answer undoubtedly would be the permanent policy. And then I ask them why. And they tell me, well, the cash value builds up that I get to use. You don't have to check my health in 20 years. The cost doesn't get up. Oh yeah, and I have cash value in 40 years. The fact is, a lot of your customers will not say that they're still insured at age 80, or at least they have a death benefit on this side. The fact is, your customer will focus primarily on the benefits to them: cash value, the health, cost, and again, the cash value. So then I want to ask them, if price was not an issue again, which again gets rid of the objection of price, which policy would you not want and why? It's a rhetorical question. The answer that your customer will say is, well, I don't want that term policy. And then I ask them why. They'll tell me, well, no cash value is being built up. You need to check my health in 20 years. Cost goes up drastically. And again, no cash value. Oh yeah, by the way, I'm not insurable at age 80. So that's exactly how the policy works. This is exactly how the sales method works that you want to show your customers. Now, let me actually go back for a second. A lot of my agents and advisors that I speak with about this and show them, they become a little intimidated on the numbers that I'm using. Now, I've done this 5, 6, maybe even 700 times with customers. And I'm understanding exactly how the numbers work, and it comes off very easy for me. But there was a time where this was brand new to me personally. So all I did was I wrote it all out in my own writing, and I brought it to the customer and I said, hey, Mr. and Mrs. Client, do you mind if I show you a quick sales idea that I showed someone else previously? Their answer, absolutely. The numbers were already written out. All I did was I just covered it and I just told a story. And I just went down row by row, going over exactly how the policies work. Over time, I became more comfortable and then was able to show my customers exactly how this works just on a yellow pad of paper and just started to write it out. You can do exactly the same. So just again, going over the benefits of this for the client, understanding of how life insurance works. That's one of the hardest things for clients to understand, but we're doing just that. We're debunking any permanent myths. So all the Orman ideas that are going out there, those are all debunked. Realization of the living benefits, exactly how it can help them personally. People are selfish. It's just by nature. So if we can show them benefits to them personally, it'll help in the sale of that life insurance. And by asking those last two questions, we're empowering our clients to make the best decision possible. And they're making the decision, not us. For you as the agent or the advisor, you're providing a clear understanding of exactly how life insurance works. What you're also doing is you're discussing the benefits of all types of policies. So you're not just selling them on permanent policy, the permanent policy. You're also showing them exactly how they all work. You're empowering your client to make the best decision again. Higher premium case. I can't stress enough how this helped me close that $100,000 a year life insurance. It was a 10-pay policy, solely based on this first method that we used. And we're all happy if we're increasing our life close ratio, aren't we? Again, this is the life policy description that I highly recommend that you use with your clientele. And this is Tristan Thomas with Liss Academy, your life insurance experts.